Lessor L leases retail space to lessee Z and classifies the lease as an operating lease. The lease includes fixed payments of rupees 10,000 per month. So we have entered into an operating lease arrangement. Then they are saying due to the COVID-19 pandemic, L and Z agree on a rent concession that allows Z to pay no rent in the period from July 2020 to September 2020, but to pay rent of rupees 20,000 per month in the period from January 2021 to March 2021. There are no other changes in the lease. How this will be accounted for by the lessor. So we are carrying out changes in the terms of our agreement. Now, if you just see it carefully, you are supposed to pay 10,000 rupees per month. So your original terms are that you should be paying 10,000 per month. Now, what we are saying is that because of the COVID pandemic, we are giving a concession to our client. We are suggesting to our client that see, from July 2020 to September 2020, do not pay any lease rent. So July, August and September, right? For 3 months, we are saying that do not pay the lease rent. But we are not waiving the lease rent. We are not saying that you don't pay lease rent at all. Instead, we are suggesting that see, during these 3 months, whatever lease rent that you have not paid, in the month from January to March, you will have to pay 20,000 rupees. So 10,000 rupees in any case is to be paid, but 10,000 rupees for the 3 months which were not paid earlier, that are needed to be paid. Now we know that in case of an operating lease, we should first calculate the total lease receipts, and the total lease receipts are to be recognized as income on straight line basis, unless of course if some other systematic basis available. As you can observe here, there will be no change in the total receipts. The total receipts will remain the same. Yes, the timing is changing, but the total receipt is going to be the same. If the total receipt is going to be the same, then the income to be recognized each month or the income to be recognized each year will also remain the same. In other words, this is no modification at all. It's only the timing of the lease rent that we are adjusting. So if they are asking us that how will this be accounted for, our answer will be that there is no modification at all. This is not a lease modification. And because there is no lease modification, we will continue for the accounting as we were doing it earlier. Yeah, they are saying that L determines that the reduction in the lease payment in July 2020 to September 2020 and the proportional increase in January 2021 to March 2021 does not result in an overall change in the consideration for the lease. As I said, total lease receipts are remaining the same. L does not account for the change as a lease modification. This is not a lease modification. Whatever income that you are recognizing till now, continue with the same accounting treatment. So we will keep on following the straight line basis unless and until you have some another base. Yes. Lessor M enters into a 10-year lease of office space with lessee K, which commences on 1st April 2015. So it's a 10-year lease. It is commencing on 1st April 2015. Fine. The rental payments are 15,000 rupees per month, payable in arrears. Payable in arrears means payable at the end of the month. M classifies the lease as an operating lease. So we have classified as a lessor as operating lease. M reimburses K's relocation costs of K of rupees 6 lakhs, which M accounts for as a lease incentive. The lease incentive is recognized as a reduction in the rental income over the lease term using the same basis as for the lease income. And in this case, it is a straight line basis over 10 years. Okay. On 1st April 2020, during the COVID-19 pandemic, M agrees to waive K's rental payments for May, June and July 2020. See, it's different now. In the earlier case, we were saying that you don't pay the rent now, later we will proportionately increase your rent. So our total lease receipts were not getting disturbed. But this time we are waiving, we are suggesting to our lessee that you don't pay lease rent at all. If the lease rent is not paid at all, then automatically your total lease receipts will change. And if the total lease receipts are changing, then this is definitely a lease modification because there is a change in the consideration. They say this decrease in consideration, I'm reading this decrease in consideration is not included in the original terms and conditions of the lease and therefore is a lease modification. How this will be accounted for? Okay, originally we have classified this as an operating lease. So we have an operating lease. Remember, whenever an operating lease is modified, we treat it as termination of the old lease and a creation of a new lease. See, operating lease modification. A lessor shall account for a modification to an operating lease as a new lease. And we have to do this from the effective date of the modification. So that's what our response shall be over here. Whatever you have done accounting till now, do not disturb it. Effect has to be given prospectively, but consider as if that operating lease has come to an end. Now make a fresh calculation that what shall be the revised lease receipts. And the revised lease receipts will be recognized as an income over the remaining lease period. Right. One issue which will arise us for this particular relocation cost. Now we had commenced this on 1st April 2015 and we had incurred a relocation cost of 6 lakhs. We have basically, what we can say, reimbursed the relocation cost of the lessee. So this is a lease incentive. Lease incentive will basically decrease your lease receipts. So you must be recognizing this as a reduction from your rental income. Now this modification is happening on 1st April 2020. So 1st April 2020. So the time period, right, between these two is turning out to be 5 years. So the 6 lakhs, right, the 6 lakhs has been recognized as a reduction in the lease income. So you must be doing it on straight line basis. So 6 lakhs, I divide by 10. So every year your lease rental is decreasing by 60,000. 5 years have now already passed by. So that will turn out to be 3 lakhs, isn't it? So lease incentive was 6 lakhs, which has now been transferred to the P&L to the extent of 3 lakhs. In other words, 3 lakhs of lease incentive is still unamortized. So whatever is the revised lease rent, this revised lease rent will be recognized over the lease tenure, remaining lease tenure of 5 years, because we will treat it as a new lease. And this unamortized portion, that will also be recognized over the remaining period of 5 years. We will consider this unamortized amount of the lease incentive as a reduction in the lease rental income over the remaining tenure. M accounts for this modification as a new operating lease from its effective date, that is 1st April 2020. So whatever income you have recognized till now, let it remain as it is. Consider as if the old operating lease has terminated and from 1st April 2020, a new operating lease has commenced. Make a revised calculation of the total lease receipts and recognize it as your income over the remaining period of 5 years. As far as that lease incentive was considered, we were transferring it to our P&L as a reduction in the rental income. And as I said, out of 6 lakhs, 3 lakhs is already transferred to the P&L because 5 years have already got completed. So 5 years still is unamortized, which is 3 lakhs. That we will recognize over the remaining lease tenure. Or instead of lease tenure, I can say whatever is the lease tenure of the new operating lease. M recognizes the impact of the waiver on a straight line basis over the 5-year term of the new lease. M also takes into account the carrying amount of the unamortized lease incentive on 1st April 2020, which is 3 lakhs. I've explained to you that how that amount is turning out to be 3 lakhs. We will amortize this balance on a straight line basis over the 5-year term of the new lease. Lesser L enters into an 8-year lease of 40 lorries with lessee M that commences on 1st January 2018. The lease term approximates the lorry's economic life, and no other features indicate that the lease transfer or does not transfer substantially all of the risk and rewards incident to ownership of the lorries. Assuming that substantially all of the risk and rewards incidental to ownership of the lorries are transferred, L classifies the lease as a finance lease. See, this is crucial. They say the lease term approximates the lorry's economic life. We know that this is one of the situations in which the lease will be classified as operating lease. So on 1st January 18, we are classifying this as a finance lease, right? So we say it's a finance lease, and once you say it is a finance lease, what will you do in the books of the lessor? You will have to recognize net investment in lease, isn't it? You will recognize net investment in lease, and you will de-recognize the underlying asset. So de-recognize the underlying asset. These are two things that will definitely be done because you are classifying this as a finance lease. Okay. So the lease term approximates the lorry's economic life. So I'm classifying this as finance lease. I believe I said earlier operating lease. I'm not too sure. But yes, if the lease is covering a major part of the useful economic life, then this is one of the situations in which the lease will be classified as a finance lease. If I had said operating lease earlier, then that was a mistake. So as I said, I'll classify this as a finance lease. I will recognize the net investment in lease, and I will de-recognize. I'll remove these lorries from my books. Now, during the COVID-19 pandemic, M's business has contracted. In June 2020, L and M amend the contract so that it now terminates on 31st December 2020. Early termination was not part of the original terms and conditions of the lease, and this is therefore a lease modification, right? The modification does not grant M an additional right to use the underlying assets and therefore cannot be accounted for as a separate lease. We know that when a finance lease is getting modified, if the scope of the finance lease is increasing and the consideration is increasing commensurate to the standalone price, we consider the modification as a separate lease. Here, it is not turning out to be a case for the same because the number of lorries which have been rented out is not increasing. So the scope is not increasing. If the scope is not increasing, it cannot become a separate lease. So that's the question. How this will be accounted for by the lessor. Whenever you have entered into a finance lease, you may consider the modification as a separate lease, but that is already ruled out. So this will turn out to be a lease modification which does not result into a separate lease. If it does not result into a separate lease, then the guidance given in Ind AS 116 is that please check, is the finance lease still a finance lease or has it now become an operating lease? Whatever are the new terms and conditions, if these terms and conditions were existing right from the very beginning, right from the inception of the lease, would have you classified this lease as operating or would have you classified this lease as finance? If finance lease still remains finance lease, then there is no problem. But if the finance lease has become an operating lease, then accounting, or rather I'll say then appropriate adjustments in the books of the lessor will be necessary. We see the write-up for it. Here it is. Modification, not a separate lease. See this. We'll read from here. If the lease would have been classified as an operating lease, had the modified terms been effective from the inception date, then the lessor accounts for the lease modification as the termination of the original lease and creation of a new lease from the effective date of the modification. and then measures the carrying amount of the underlying asset as the net investment in the original lease immediately before the effective date of the lease modification. So if you look at we just look at over here, they are saying it's an 8-year lease, and that you have entered into at 2018 and another 8 years. So this was something that was supposed to continue till 2026. Now we are saying it will terminate in December 2020 itself. So you started in 2018 and in 2 years it will come to an end. It seems that the useful economic life of the lorries was 8 years. Earlier, the lease was covering the entire useful economic life. So you classified that as finance lease. Now the useful economic life is 8 years, but the lease is only for 2 years. If the lease is only for 2 years, then you cannot classify this as finance lease. That means it is an operating lease. So finance lease has got terminated, and we will have to account for this as a new lease, which is an operating lease. So you have recognized right now net investment in lease. So now this has to be derecognized. And earlier you had derecognized the underlying asset. This has to be recognized. So underlying asset account will be debited and the net investment in lease will be credited. Remember, whatever is the carrying amount of the net investment, that will become the initial carrying amount of the asset. See this point. Measure the carrying amount of the underlying asset as the net investment in the original lease. Whatever is the net investment in the lease on the date of the modification, consider that as the starting point. Because in finance lease, what happens is you have to derecognize the asset. If right from the very beginning you had entered into an operating lease, then you would not have derecognized the asset. The asset would have remained as it is in your books. So I have to bring the asset back into my books. So what I am showing right now as net investment in lease, I shall credit it and I will debit the carrying amount. I'll debit the asset and that will become the initial carrying amount. So L determines that had the modified terms been effective at the inception date, the lease term would not have been for the major part of the lorry's economic life. And that is the reason we are saying that we would have classified this as an operating lease. So consider this as a new lease. Derecognize the finance lease receivable and recognize the underlying asset in its statement of financial position according to the nature of the underlying asset. This time it is lorries, so it will become a part of the PPE. Okay, measure the aggregate carrying amount of the underlying assets as the amount of the net investment in the lease immediately before the effective date. So whatever is the balance in the net investment in lease, consider that as the carrying amount of that PP that we are going to recognize.